Welcome back guys, I'm here again. This video I'm making because some of my YouTube friends they're asking to know about the FOMC setup, how I make the plan for the FOMC, and also some of them asking for the breaker, what is breaker, how I utilize the breaker, and also the shifting market structure, which low or which high should be focused for shifting in market structure. So I will talk about all of this thing in this video. But ICT is the best teacher. You guys should go to him and check his videos because he explain everything better than anyone because this is his concept. I'm just a student of him. All of this I'm talking over here. This is my understanding. I'm his student for nearly 23 months. Okay, let's go to the plan. I'm not talking about the bias because I have already uploaded a bias video yesterday before the session. So you guys can check that out why I was bearish the whole day. And this is 1 minute time frame. This is the 15-minute fair value gap. You see this fair value gap. You can say this is the I fair value gap. This is the consequent encroachment of that I fair value gap. And this is 2 p.m. This candle, this specific candle is 2 p.m. candle. The FOMC was at 2 p.m. So market come down, consolidate, take the liquidity, then go up. It has gone this far, then come down little bit, go again up. At 2:30 it has taken all the liquidity from here. So you can see the market was actually bullish in the FOMC time. As ICT told, the first run of the FOMC news is the fake run. The second run, that means 2:30 run, is the real move. As my bias was bearish, I was looking for sell. All of this place I was just watching. I was hoping that price will go up, then I will get a market structure shift, fair value gap. I will take short and go to the level I have marked before. You guys again please check my daily bias video I have uploaded before the session. Where was my target? Everything you will find out from there. So this is 1 minute chart. When market come here in this candle, 226 candle, make a low and then go high. This liquidity has taken by this candle. 15-minute I fair value gap consequent encroachment. It has traded over there and reject price. What does it mean? That means the consequent encroachment of the 15-minute I fair value gap, it stopped price to go higher. Then market comes lower, break this low. You see, this is my market structure shift. I will talk about why this low is my market structure shift, why this low is not the shift in market structure. I will talk about this later. Give me some time. This, you see this fair value gap. This is the daily fair value gap, and this is the low of the daily fair value gap. Market break the low, this low, shift in market structure, go up, respect that low of the daily fair value gap, breaker, also the fair value gap. All of this actually help me to be confident that market will go lower. Then market come low. This is the breakaway gap. There is a little portion that should not be traded and it will confirm you that market will go lower. This is the breakaway gap. There is another gap. Market trade that gap beautifully, break lower. This is the water block. Market go to the water block, again go lower. This is ICT's institutional order flow entry trail. That means the guys who didn't take the entry from here, 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 they didn't get a chance to take the entry from here. They can take the entry in that fair value gap, because the ultimate goal is this level. This is the level of the monthly fair value gap high. You see it has traded here at 923. So if you hold your trade for a long time, then you can take the entry here in the institutional order flow entry drill. But for me, at 4:30, 4, the session has ended. So from here to here, it's nearly about 700. Not bad. 700 is very good amount, because ICT always still to go for the 5 handle, so it's 2 more handle. So you can take an entry here, and you see this is the exit. This candle should be the exit candle. This was the shallow run, you see, a little shallow run, and this is actual run. Okay, so that was the plan for the FOMC. In FOMC days, when the news released at 2, wait for 2:30. Don't be confused about this move. Just be careful, find out what is your daily bias, and if your daily bias is bearish, you will expect a bullish run before 2:30. 2 p.m. is the FOMC, 2:30 p.m. is the real move. So my bias was bearish. I was expecting price will go lower, so I was waiting to go price higher. It has go high, take this liquidity, also this liquidity, then shift in market structure, fair value gap entry to the downside. This is the plan for FOMC days. I think it's clear now. If you think you need more information, just be with me. I will try to explain in every FOMC CPI news how to trade in that news. After the news, obviously, don't before the news. Now come to the point for breaker. What is breaker? Breaker means high, low, higher high. The lowest candle is my breaker. When price go through this low, then this breaker is very very strong to hold the price. Most of the time it should trade at the middle of the breaker. It won't go to the upper level of the breaker. The wick can go. It's simple. As I told, wick did the damage, body tells the story. So when you will see something like this breaker, you can put your stop loss just up to the breaker. Although I put my stop loss to this candle's high, as little bit more conservative, because it is FOMC day, so price can go the week. It can go to the upper level of the breaker and then come down. So I put my stop loss just up to this candle. You will see I have uploaded the video as well, the trading, the taking trade video. You can check that out, guys, as well. So this is the breaker. So what is breaker? Price go up, down, and higher high. When price break the low, the down close candle is my breaker. Down, go up, support this breaker, break lower. Now come to the point why this one is market structure shift, why this is not the market structure shift, why this is not the market structure shift. For me, to valid a shift in market structure, it should break a low, which is actually the intermediate low or intermediate high, which should be break for the market structure shift. How can I know this is the intermediate low? You see this gap, this fair value gap, this candle, this low, it has actually traded this gap. For trading this gap, this candle has made as a intermediate time low. This candle, it didn't trade any fair value gap over here. You see, no fair value gap here, which has traded by this candle. So I don't think, for me, this is not the market structure shift. This is more obvious market structure shift because it has traded this gap. Okay, let me give another example so that you will understand. Oh, one more thing. If your bias is bearish, then this is shift in market structure. Otherwise, it's not the valid shift in market structure. Don't be confused. If I was bullish for the day, this won't be the market structure shift for me. This was simply the taking liquidity. Then I will be waited for shift the market structure from here. This one, you see this candle high, it has traded this gap, a little gap. So this would be the shift in market structure, like this. There is another way to define the the low as an intermediate term low. If the low has a lower low here and a lower low here, then this low would be a intermediate term low as well. Let me find out another example. Okay. You see this candle. Okay. This is the shift in market structure for me. Not this one, not this one. Why? You see this low? There is a lower low here and a lower low here. Or here you can say this one is also a swing low. So there is a swing low and there is a swing low. Both of them are lower than this low. So this is the most obvious low which should be shifted for market structure shift. You see market shift over here, created a fair value gap, market trade there, go lower. Also you see this low, it has traded this gap, it has traded that gap. If there was not the low in both sides, like just think there is no lower low here, it's just a candle, then also this would be a intermediate term low for me because it has traded this gap. So for shift in market structure, I need a low. Either it has to trade a fair value gap, or it has to be a lower low in its right and lower low in its left. Then it will be the intermediate term low for me, and I will mark that candle, that specific low, for shift in market structure. Take me another example for higher shift in market structure. Okay. What can I say? You see this high, it has traded this gap, and then this Quran, it has shift in market structure, but this is not the shift in market structure for me because my bias is bearish. So I will mark that as a liquidity. It's actually took the liquidity. It's not shift in market structure. It has taken the liquidity, then come back. This low, you see, this low, when it is shifted, this is my market structure shift. Why this low? Because there is a low, you see, very small low, but it's not obvious. This low is very obvious, which has traded this fair value gap. This fair value gap. Also, if you think there is a swing low, there is a swing low. Both low made this intermediate term low. Although it's not, it's not very clear shift in market structure, or I won't say this is market structure shift. I am just telling this because so that you can understand why this one is market structure shift, not this one. Let me take up here. Okay, for higher shift in market structure. Okay, see this high, it has traded this gap. Although these all highs are same in the same level, think that this not existed here, only this one. So this one has traded this gap. So this is the high which should be broken for shift in market structure. Like here, you see this high, it has broken here, but this is not the shift in market structure. Okay, let me mark this. Okay. It's little bit high than this highs. You see this highs, this little bit higher. When this one has shifted like this is not shift in market structure for me. Why? Because it didn't trade any fair value gap here. There is no fair value gap which is traded by this high. Also, this high has no, in its right there is another high which is higher than this high. You see this high is higher than that high. So this should not be the shift in market structure. Do you understand? I think you will understand, but I didn't find a good example so that I could show you. Okay, yeah, see here, this high, you see this high, it's break. This is not shift in market structure. You can't say this is shift in market structure. This is not shift in market structure. Why? Because this has not traded any fair value gap over here. There is no swing low in its left and in its right. There is no the swing high. I mean, if its market structure shift for me, there should be a swing high in its left and swing high in its right, which is lower than this high. Then it will be a swing high that I will mark as my market structure shift, or it has to trade a fair value gap. It didn't do anything. So when this candle break, this is not the shift in market structure for me. Hope it is clear to you because I do not want to make my video so long. I will later explain when I will find a very good example in my next video, or if I get a very obvious setup where I can explain the market structure shift clearly. I will explain that to you. I think it will be helpful for you guys. See you then. Take care. Bye bye.